Hello everyone, welcome to my YouTube channel Indian Bull vs Bear. In today's video, I will share my analysis of historical trends of the tobacco products sector. This video is part of the series The Final Missing Piece. Before moving on, please read the entire disclaimer carefully. The tobacco products sector in Indian share market comprises of companies which made tobacco products like cigarettes, BDs, chewing tobacco, and other smokeless forms. This sector is a significant part of the consumer goods market. Although the sector faces strict regulations and health concerns, it remains highly profitable due to brand loyalty, pricing power, and relatively inelastic demand for premium tobacco products like cigarettes. The key growth drivers for this sector include strong brand loyalty, high profit margins, growing affluent population, diversification strategies, export opportunities, and rural market penetration. The government policies for this sector includes high taxation, stringent advertising restrictions, mandatory health warnings, public smoking bans, production regulation, and national tobacco control program. The major challenges for this sector includes regulatory pressures, rise of illegal and smuggled products, changing consumer preferences, social stigma, dependency on a single product line, and global ESG concerns. So that is the summary of this sector. Let's now try to identify trends in this sector using two graphs, yearly returns graph and the monthly returns graph. I have analyzed the share price movement of last 10 years of top 5 companies of this sector and created these graphs based on that data. Only these 5 companies of the sector have market cap greater than 100 crore rupees. The top 5 companies of the sector comprises of 2 large cap and 3 small cap companies. So let's start with the first graph, which is the yearly returns graph. So this is the one. The green bars in this graph shows positive yearly returns. The red bar shows negative yearly returns. The orange line at the bottom shows the cumulative returns. The green line shows number of months with positive returns, whereas the red line shows number of months with negative returns. So let's start with 2015. In 2015, this sector gave decent returns of 28.31% with 7 positive months and 5 negative months. But in 2016, the returns decreased significantly, and the sector managed to give returns of only 12.49% with 6 positive months and 6 negative months. 2017 was similar to 2016, and the returns were again very low of 12.15% with 9 positive months and 3 negative months. In 2018, the returns further decreased to 7.60% with 7 positive months and 5 negative months. In 2019, the sector gave negative returns of minus 2.44% with 7 positive and 5 negative months. In 2020, the performance degraded further and the sector gave negative returns of minus 7.42% with 7 positive months and 5 negative months. But everything changed in 2021 and the sector gave very good returns of 39.96% with 7 negative months and 5 positive months. In 2022, the sector gave minimalistic returns of 11.34% with 8 positive months and 4 negative months. In 2023, the situation improved a bit and the sector gave average returns of 19.97% with 9 positive months and 3 negative months. And in 2024, the sector performed very well and gave returns of 71.13% with 8 positive months and 4 negative months. So let's follow this orange line for the cumulative return, and the cumulative return is 403.29%. So almost 5x in 10 years, which is not bad at all. Let's see the other key takeaways. So the cumulative return is 403.29, which is 5x. So not bad, although there are several sectors in the Indian share market which have given cumulative returns much larger than 5x in the last 10 years. CAGR of 17.54, not bad. Average CAGR, not bad, but as I said in the previous point as well, there are a lot of sectors with better CAGR. Net negative yearly returns only two times, so which is quite a good thing. So this seems to be a defensive sector in that case, and it's a good thing. Conservative investors prefer such kind of sectors for their investment, as the chances of negative returns is quite low. The best year for the sector was the last year 2024 with 71.13%, and the worst year was 2020 with negative returns of only minus 7.42%. Positive to negative year ratio is 4 is to 1, so it's a good number. Not many sectors have only two negative years in the last 10 years. So the impression on me from this graph is that this sector is a defensive sort of sector, low returns, low volatility sector, but a safe sector. Let's see the monthly returns graph as well. So this is the monthly returns graph. The red bars over here shows negative mean monthly returns. The green bar shows positive mean monthly returns. The green line shows number of years with positive returns, whereas the red line shows number of years with negative returns. To start with January, January is a flat month for this sector with 0.08% average monthly returns, 5 positive and 5 negative years. February is another flat month with zero point 0 something negative average monthly return, 6 positive years and 4 negative years. March is the worst month for this sector with negative 2.88% average monthly returns, 6 negative years and 4 positive years. Then April is a good month for the sector with 4.31% returns and 8 years positive and 2 years negative. May, an average month for the sector with 1.51% average returns, 7 positive years and 3 negative years. June, another flat month with negative 0.64% average monthly returns, 5 positive years and 5 negative years. July is the best month for this sector with 6.19% average returns, 7 positive years and 3 negative years. August, another strong month with 3.45% returns, 6 positive years and 4 negative years. But September is another flat month for this sector with 0.07% average monthly returns with 6 negative years and 4 positive years. October and November are strong months for this sector with 3.7% returns and 3.55% returns. In October, the sector gave positive returns 6 times, and for November, it gave positive returns 8 times in the last 10 years. And finally, December is again a flat month for this sector with 0.57% returns, 7 positive years, and 3 negative years. So again, this graph is giving the same impression as the last one. It's a defensive sector. Only 1 month gives has given significant negative returns. Otherwise, there are 1, 2, 3, 4, 5 months with flattish returns, and 1 month, one good month could be July, and probably April, and three other decent months. So all in all, again the same impression. It's an defensive. It's a defensive sector for conservative investors. It seems. Let's see the key takeaways from this graph. Cheaper months: January, February, March, June, and September. January, February, March, June, and September. In fact, December too can be included. The costlier months are April and July. So April with 4.31 and July is the best with 6.19. Few other honorable mentions could be August, October, and November. And finally, the positive to negative month ratio is 1.55 is to 1, which means 1.55 positive months against each negative month in the last 10 years, that is in the last 120 months. So this is a good number. This is a good number better than, I guess, several sectors, maybe even few which have better CAGR. But all in all, very good number for the sector. So that is all from my side in this video. Thanks for watching it, and subscribe to the channel if you haven't already, and share this video with your family and friends. Click the like button. Let me know how do you like this content in the comment box. I'll be back soon with another video. Goodbye for now.